Hello everyone, welcome back to Chill Deal Trades, where I analyze the market so you know what's going on. Today's daily video, we're going to be covering just the overall market and what's going on. There's been a lot of news lately, from the Fed to the President to Senate, and what could that be causing in the markets? We saw a little bit of a push higher, so what does that necessarily mean, and how much more upside could there be? But if you're here and you haven't hit the sub button, please go ahead and hit that sub. We're on the race to 500 subs and 1,000 by November, so please help the channel get there and grow the community. That'd be much appreciated. I make daily videos for you guys, so always good content coming out. But let's go ahead and jump in. So the first thing I want to get to is all the news that's come over essentially the last 48 hours. So the first one is infrastructure bill. It kind of came out of nowhere. We had the Fed come out and speak on, what's today? Thursday, Wednesday. The week is going quick. Come out on Wednesday and talk about COVID, and a lot of people were worried, are they going to be talking about tapering? Are they going to be talking about interest rates? And essentially the same things have come out since the last few times Powell has spoke. He says substantial further progress, but we're still a good deal away from making substantial further progress. So that just means that they're not thinking about raising interest rates at all, and they still are saying we're a ways away from tapering. And so some people were in that tapering conversation, but it's still think about. We're not even close to in terms of his mind. But I'll tell you guys this, he's going to come out and say it when we're not expecting it. That's how news always happens. So we're always going to want to pay attention to see what's going on, because we're continuing to see the CPI numbers come out high. We're continuing to see the inflation numbers come out high. But today, we saw that GDP for the second quarter came below the estimates. So the estimates were about 8.5%, but we came out at about 6.5%. And so it's about a 2% difference. And so that's a really big deal, because we're coming under our growth expectations, but inflation's higher than expected. And some might be transitory, whatever that means. Even when Powell was speaking, he was talking about his perspective on transitory inflation, and what he said, which didn't make sense, is he was saying, when I say transitory, I don't mean it's going away, which doesn't make sense because that's the definition of transitory, but that it's gonna sustain, but maybe not go up. It'll stay, but it won't go up drastically from here. And so he's kind of backwardsing from some of what he said before. I think he's trying to save himself a little bit here, but we'll just have to see moving forward what happens. But there are some red flags starting to show. I've said this in a couple videos, but higher inflation, lower growth equals stagflation. That's a big worry, and or deflation could be in the near or imminent future. But I'm starting to worry that stagflation could be an issue, which is not a very good situation for the US. But kind of going back to, we saw Fed say, we're not going to be increasing anything. We're not going to be decreasing our spending. We're not going to be increasing rates. Infrastructure bill kind of came out of nowhere, out of not really being talked about much, and saying we're extremely close to passing the infrastructure bill. It's lower than what initially was going to come out to, and about half that, about 550 billion. But we're really, really close from it happening. So those two things kind of pumped the market a little bit. If we quickly go to the QQQs, didn't pump as much. Let's go to SPY actually. So the SPYs, after a couple kind of indecisive days, we had a green day and we broke above all-time highs today, but then closed the market below, and we're pulling back a little bit post-market. Part of the reason we're pulling back is because Amazon came out with earnings and said that, our revenue did not hit our expectations, but we did hit earnings, which means, they're just more profitable, maybe expensive, come down since last quarter. But they're seeing growth slow compared to prior quarters. And this is a really important thing to highlight, because even though we're seeing SPY breakout right now, we're not seeing QQQ breakout of all-time highs. And what that could be showing is a rotation out of kind of the internet names into other names. And we'll have to see what continues, because when we go to the RSP, which is the equal weighted S&P 500, it actually broke out above this consolidation zone today. So we've been consolidating sideways for basically, I think, since May, right? Yeah, since May. And we finally broke out above. We ended up having, kind of a nasty wick here. So we'll have to see what tomorrow and the next day come out as. get out of here, dude. We'll have to see what continued and see if we actually, that was a fail breakout and we come back below to this long-term trend line that we're building for maybe a little bit more downside in the market before maybe breaking out later this month. But that's something we're going to keep an eye on because it could be showing that there is a transition potentially happening in the market away from tech, away from the favorite names that have been outperforming pretty drastically lately, like the Googles, even though Facebook had not the best quarter based on some regulation news, Amazon not having a great quarter. But a lot of these names, I mentioned in the video the other day, a lot of these names are severely overbought. That's not the name we want. Google, super overbought. Adobe, these are all the names that have a high weight on the S&P 500. Obviously Amazon, we saw that it pulled back pretty drastically post-market today. But a lot of these names are overbought, which is going to create some friction in the markets, and that's why we're not seeing the QQQs break out from here. So this is what we're going to pay attention to. RSP, put it on your radar, equal weighted. If this breaks out, we might be seeing some transition in the market. Money moving away from tech, which has been on a roar. I would say FANG, which has been a roar lately, and start moving into other names. That's what we're going to keep an eye on. Something really interesting that's happening in the market is the put-call ratio. So the market's been extra volatile lately, and I want to call this out because we had a really high peak on July 16th, and that's when we had that COVID scare, and then we had a push back up. And so one of the things you have to realize is when the put-call ratio is really high, that typically coordinates with maybe there's going to be a reversal back to the upside. So let's look at historical examples to see if that's true. So when we saw the highest reading over the last year, basically back in October 30th, and when we go to the charts on the QQQ, October 30th, I need to go back more, October 30th was this reversal point. Let me get my brush out, there we go, was a reversal to the upside. And so very interestingly, we saw a peak right here, and that's why we saw that dip buy happen so drastically at this point. We saw the reading get super high down here, and that's why we saw that squeeze higher. You know, there wasn't a whole lot of buying. It was more of a squeezing action of people covering their puts on the market, buying in, and kind of, I think that's what we saw today. So with all the positive news coming about infrastructure, Fed not tapering, I think we're seeing an elevated reading on this, which is a little bit strange to me because we're also seeing a lot of things overbought in the market, which makes me think that we need a small pullback, more than what we saw a couple weeks ago here. We need something a little bit larger than this for those readings to come down in the Googles and such, and then maybe accelerate from there. But we'll have to just see over the next couple weeks because we are seeing an elevated reading here, which in theory says that the market could squeeze higher because a lot of people are expecting a pullback. When people expect a pullback, there's usually not a pullback. And when people aren't expecting a pullback, there's typically a pullback. That's how the market goes. It's here to trick you. And so we're still seeing elevated readings, so we'll have to see how this kind of number for today, this is from the 28th, so let's see where the 29th number was. The 29th went back to this 45, range. Maybe we might have a pullback coming after the breakout to all-time highs and then a reversal back below the all-time highs at the end of the day for the SPY. So those are things I want to keep an eye on. When I go to the AAII, which is a survey of how people are feeling about the market, we're seeing that the bullish indicator went back a little bit higher, and a lot of people are neutral. But I think more importantly, we're seeing a really low bearish. So what that tells me is people are either buying or they're holding right now. And so when I see a bearish reading really low, that tells me that I want to be more suspicious on these moves. To see a breakout on all-time highs on the SPY, but not seeing much follow through on that, like we broke above all-time high and then we came basically right back below all-time highs. That's telling me that it's mostly covers and not necessarily buying. So people are just covering their puts or their shorts on the market, and that what propelled it higher with all the positive news coming out. And so we really want to pay attention to see if this bearish stays low moving forward. And if that's the case, then we could be seeing a little bit of a reversal here. But lastly, I just want to go to the charts to figure out what price points we want to keep an eye on. I made a video back a few weeks ago about this kind of 440 to 444 range as a potential top before a little pullback in the market. I still feel that way. That's still my conviction. But we'll have to see what happens from here. So if we go to this trend line back from April, we touched it again. So we touched it here, pullback. we've touched it here, a little bit of pullback, and we touched it again today. And so we're going to see if what this realizes. If we keep hovering above up this to the beginning of August, or if we come down and test this kind of line, if we zoom out here, this is back from the beginning of COVID, and we test a couple trend lines here, and it looks like we've tested it 1 time, 2 time, 3 time, and we'll see if we come back and test it, see what happens there. If we test it and break below, then these are the other trend lines we want to look for. I've been looking for about a 5 to 7% pullback, and because the market's been breaking higher, it's bringing up the potential pullback zone, and so 5 to 7% is actually where we pulled back here. I think it's about 5 to 6%, and so we're going to have to see if it pulls back, makes a double bottom. That's what we saw back here in the market actually. Where was it here? We saw it pull back, it came back up, it double bottomed essentially, and so we'll have to see if we see a similar trend as all the bullishness kept pushing to higher highs, and see if we get about a 5 to 6 correction back to that point or not. So that's what I'm going to be looking at over the next coming weeks, is if we can hold this triangle, and if not, then we're probably coming back to that range. And that's kind of a sentiment for the QQQs as well. So we touched this line back here, and since then the pullback, we haven't got back up there. So with the Amazon weakness, I doubt that we're going to push back to this trend line. Obviously Amazon is such a high weight for the QQQs, and so I would say that's more unlikely, because I think we do see the futures coming back to 363 on the QQQs, which breaks this trend line, which is this more recent one. So this is essentially, we can delete this now because this does not exist. So we'll have to see if we come back and test this 361 range, and if we do and we break below these two trend lines, then I would say we have a bigger pullback around 348 to 342 is my range, either back to these past time all-time highs, or to the 100-day, or sorry, that's the 50-day, back to the 50-day EMA, which we didn't touch when we had this pullback. The other one is the more drastic pullback, which is the 100-day, which I said is just a little bit lower than that, but I think this can start curling up more around to this 340 to 344 range. That's going to be the more secondary range on the QQQs. But that was a longer video than I expected, but I hope you found some good news on that. We covered a lot, and there's a lot of things you want to keep an eye on. And we're seeing a lot of negativity in terms of divergence and more technicals that aren't making sense. And when things don't make sense, I start putting up a lot of red flags, and so that's kind of the camp I'm in right now. But I hope you like the content. Please sub if you haven't, and I make a video every day, so I'll see you again tomorrow.